Preparing for a HSBC GSC interview preparation, operations, finance, and risk roles interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work at HSBC GSC. The interviewer wants to assess your communication, motivation for HSBC, understanding of GSC shared services, and whether your background fits operations, finance, or risk-driven delivery environments. While answering, focus on your relevant experience, process discipline, analytical strengths, stakeholder mindset, and interest in HSBC's global banking platform, controls culture, and career growth opportunities. I would position myself as someone who enjoys structured, accuracy-driven work with measurable outcomes. My background has given me exposure to reconciliations, reporting, process checks, and stakeholder coordination. HSBC GSC appeals to me because it supports global businesses where quality, controls, and timelines matter every day. I also like the scale of the organization. Working here would help me deepen my domain knowledge while contributing to reliable service delivery. Question 2. What do you understand about HSBC GSC and the type of work performed there? This question evaluates whether you researched HSBC GSC, understand global capability centers, and can connect back office, middle office, finance, operations, and risk work to banking outcomes. Make sure to cover global process support, transaction processing, finance reporting, risk controls, customer operations, compliance support, service level agreements, and coordination with onshore HSBC teams. HSBC GSC is a global capability and service center supporting HSBC's businesses across countries and functions. The work can include operations processing, finance support, reconciliations, risk monitoring, compliance checks, data validation, reporting, and customer service processes. The key point is that GSC teams help global HSBC entities run efficiently and safely. Accuracy, turnaround time, controls, and escalation discipline are critical because errors can affect customers, regulatory reporting, and business decisions. Question 3. How would you handle a high-volume operations process with strict cutoff times? The interviewer is testing your understanding of time-sensitive banking operations, prioritization, queue management, SLA adherence, escalation, and maintaining accuracy under pressure. In your answer, talk about prioritizing by risk and deadline, using checklists, monitoring queues, communicating early, documenting exceptions, and balancing speed with control quality. In a high-volume process, I would first identify the cutoff, priority items, dependencies, and any exception cases. I would use a tracker or queue view to separate routine transactions from items needing investigation. For urgent breaks, I would escalate early rather than wait until the deadline. I would also perform sample or maker-checker validation where required. The goal is not just finishing fast. It is meeting the SLA without creating downstream errors. Question 4. Can you explain what reconciliation is and why it matters in banking operations? The interviewer wants to assess your grasp of reconciliation fundamentals. Break identification, financial accuracy, operational control, and the impact of unresolved differences on reporting or settlement. Be sure to mention comparing two independent records, identifying breaks, investigating timing or posting differences, resolving exceptions, documenting actions, and escalating aged or material items. Reconciliation means comparing two sets of records to confirm they agree, such as internal books versus bank statements, system balances, or counterparty records. It matters because differences can indicate timing issues, incorrect postings, failed settlements, duplicate entries, or even control gaps. I would identify the break, classify the reason, gather evidence, and resolve or escalate it. Good reconciliation protects financial accuracy and gives management confidence in reported balances. Question 5. What is operational risk, and how can it arise in a GSC process? This question evaluates your understanding of operational risk events, process failures, people errors, system issues, external events, and the importance of controls within HSBC's risk culture. While answering, focus on error prevention, control design, segregation of duties, documentation, system access, escalation, incident reporting, and examples relevant to finance or operations processing. Operational risk is the risk of loss from failed processes, people, systems, or external events. In a GSC process, it could arise from incorrect data entry, missed approvals, weak access controls, system downtime, or failure to follow procedures. I would reduce it through clear SOPs, maker-checker controls, reconciliations, exception reporting, and timely escalation. The important behavior is transparency. If something goes wrong, report it early and help fix the root cause. Question 6. How do you ensure accuracy when working with financial data or reports? The interviewer is testing your attention to detail, control mindset, ability to validate numbers, and practical approach to reducing reporting errors in finance or risk roles. Make sure to cover source validation, reasonableness checks, reconciliations, variance analysis, peer review, version control, audit trail, and documenting assumptions or manual adjustments. I treat financial data accuracy as a control process, not just a typing task. I start by confirming the source, date, and report parameters. Then I run reasonableness checks, compare totals to prior periods, investigate unusual variances, and reconcile key figures to source systems. If there are manual adjustments, I document the reason and supporting evidence. Before submission, I prefer a final review against the required format and deadline. Question 7. What would you do if you found a material error just before submitting a report? The interviewer wants to assess judgment under pressure, escalation discipline, integrity, stakeholder communication, and whether you prioritize accurate reporting over hiding mistakes. In your answer, talk about stopping submission if possible, quantifying impact, notifying the manager, correcting with evidence, documenting the issue, and recommending preventive action. If I found a material error before submission, I would not ignore it to meet the deadline. I would quickly quantify the impact, identify the source of the error, and inform my manager with facts, not assumptions. If time allows, I would correct the report and retain evidence of the change. If submission must be delayed, I would help communicate the reason. Afterward, I would support root cause analysis to prevent recurrence. Question 8. How do maker-checker controls work, and why are they important? This question evaluates your understanding of segregation of duties, control effectiveness, error reduction, fraud prevention, and practical workflow governance in operations and finance teams. Be sure to mention independent review, authorization limits, evidence of checking, avoiding self-approval, exception handling, and how maker-checker controls strengthen accountability. Maker-checker is a control where one person prepares or processes an item and another independently reviews or approves it. For example, a maker may input payment details, while a checker verifies beneficiary data, amount, support, and authorization before release. This reduces processing errors and lowers fraud risk because no single person controls the full transaction. It only works well when the checker performs a real review and leaves clear evidence. Question 9. What are KYC and AML, and why are they important for a bank like HSBC? The interviewer is testing your awareness of financial crime risk, customer due diligence, regulatory expectations, and HSBC's strong focus on compliance and responsible banking. While answering, focus on identifying customers, understanding beneficial ownership, monitoring transactions, sanction screening, suspicious activity escalation, and protecting the bank from legal and reputational risk. KYC means knowing who the customer is, what they do, who owns or controls them, and whether their activity makes sense. AML focuses on detecting and preventing money laundering and terrorist financing. For HSBC, this is critical because it operates globally and faces complex cross-border risks. Strong KYC, screening, transaction monitoring, and escalation processes protect customers, regulators, and the bank's reputation. Compliance is not optional. It is part of safe banking. Question 10. How would you investigate an exception or break in a process? This question evaluates your analytical problem solving, ability to trace issues through systems, evidence gathering, stakeholder follow-up, and disciplined closure of operational exceptions. Make sure to cover understanding the expected outcome, comparing source records, isolating timing versus genuine breaks, contacting owners, documenting evidence, and tracking closure. I would start by understanding what the process expected and what actually happened. Then I would compare source records, timestamps, transaction references, approvals, and system entries. If it is a timing difference, I would track it to expected clearance. If it is a genuine error, I would identify the owner and correction required. I would document the investigation trail and keep the item open until evidence confirms closure. Question 11. Explain the difference between financial accounting and management reporting. The interviewer wants to assess your finance fundamentals, reporting orientation, understanding of external versus internal users, and ability to support finance roles beyond mechanical data preparation. In your answer, talk about statutory standards, historical reporting, accuracy and auditability, versus internal decision support, performance analysis, budgeting, forecasting, and business commentary. Financial accounting is mainly for external reporting and follows accounting standards, audit requirements, and regulatory timelines. It focuses on accurate historical financial statements, such as the income statement, balance sheet, and cash flow statement. Management reporting is internal and helps leaders understand performance, costs, trends, and forecasts. It may include dashboards, variance analysis, and commentary. In a GSC finance role, both matter. Statutory accuracy supports compliance, while management reporting supports decisions. Question 12. What key risks would you consider when preparing or reviewing a balance sheet reconciliation? This question evaluates your understanding of account ownership, completeness, aging, substantiation, unexplained balances, and the control importance of balance sheet reconciliations. Be sure to mention account purpose, supporting documentation, aged items, suspense balances, unusual movements, manual journals, ownership, sign-off, and escalation of unreconciled differences. For a balance sheet reconciliation, I would focus on whether the balance is complete, valid, and properly supported. Key risks include old unreconciled items, unsupported manual journals, suspense balances, incorrect account mapping, and unusual movements from the prior period. I would check supporting schedules, aging, ownership, and whether reconciling items have clear action plans. A reconciliation should not just match numbers, it should prove the balance makes sense. Question 13. Describe a time you worked with stakeholders to resolve a process issue. The interviewer is testing behavioral evidence of collaboration, communication, ownership, escalation, and your ability to coordinate with onshore teams or cross-functional process owners. While answering, use a STAR structure. Explain the issue, stakeholders involved, actions taken, communication approach, result achieved, and what you learned about process improvement. In one reporting process, a recurring variance appeared because two teams used different cutoff dates. I mapped the data flow, confirmed the source timing with both teams, and proposed a shared calendar with clear submission deadlines. I also added a pre-submission check to flag date mismatches. The variance reduced significantly in the next cycle. The lesson was that many issues are not technical. They come from unclear ownership and communication. Question 14. How do you prioritize tasks when multiple urgent requests come from different managers? This question evaluates prioritization, professional communication, conflict handling, risk-based judgment, and whether you can manage multiple stakeholders without missing critical deadlines. Make sure to cover assessing deadline, business impact, regulatory risk, effort required, dependency, communicating trade-offs, confirming priorities with managers, and updating stakeholders proactively. I would avoid reacting only to the loudest request. First, I would list the tasks, deadlines, business impact, regulatory sensitivity, and effort required. If two items genuinely conflict, I would speak to the relevant managers, explain the trade-off, and confirm the priority order. I would also give realistic timelines rather than overpromise. In banking operations, prioritization should be risk-based. Regulatory, customer impacting, and cutoff-driven work usually comes first. Question 15. Why should we hire you for an operations, finance, or risk role at HSBC GSC? The interviewer wants to assess your closing pitch, role fit, confidence, understanding of HSBC's expectations, and ability to connect your skills to measurable team contribution. In your answer, talk about accuracy, ownership, analytical ability, process discipline, adaptability, stakeholder communication, willingness to learn, and alignment with HSBC's control-focused environment. You should hire me because I bring the right combination of accuracy, ownership, and learning agility for a GSC environment. I am comfortable working with data, deadlines, controls, and process documentation. I also understand that in banking, small errors can create large downstream issues, so I take review and escalation seriously. I would contribute by delivering reliable work, improving how issues are tracked, and building strong trust with stakeholders. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.